Good morning or good afternoon over in the New York time zone. Welcome to the Fintech panel. My name is Arthur Mrozowski, and I'm kind of like a 35-year veteran of startups here in Silicon Valley. And I ran Silicon Hill Ventures, but actually very recently I started a new company called Blue Bank, which is an AI machine-to-machine payment platform. But I don't want to talk too much about myself. Well, we have a fantastic panelist here, and I'd like to start with the introduction with Maggie Liu from Fin Capital. She's headquartered here in San Francisco with offices in Los Angeles, London, and Miami, and New York. So I'll let Maggie to introduce herself and tell the story about what it is that you're doing.
Okay, thanks, Arthur. My name is Maggie Liu. I have had a fun career. So I have had a fun career for over 25 years. So and currently, actually, I've been working with multiple VCs in both CFO and advisor capacity. So for some funds, I handle everything except the investment decisions. So I've been very fortunate to have the opportunity to work at some of the top tier funds in my early career, including Goldman Sachs. At Goldman Sachs, I worked in the asset management, Goldman Sachs asset management, and handled the investor level activities. So basically, I managed the subscription and also redemptions for alternative investments, including hedge funds, fund hedge funds, exchange funds, and private equity.
Oh, thank you, Maggie.
Yeah.
And then we actually have a Julia Valentine. She's a chief operating officer at the AlphaMille in New York. So Julia, can you say a few things about yourself?
Hi, Arthur. Hello, everyone on the panel. So great to see you. Hello, Marty. I've been in technology for and operations for over 30 years. Starting with JP Morgan, D.E. Shaw, a very large family office, one of the top 10 in the world, and then the Wisconsin Pension Fund was 110 billion AUM, and I was CTO and COO. And my passion is building technology and setting up family offices and companies and building them out. So that's it in a nutshell.
Well, and then you're talking to us from New York, right?
Yes, I'm in New York City right now.
Perfect. So we have another New Yorker here, Ron Devari, and he's the executive chairman and chief investment officer at NewOak Capital. And let you Ron talk about yourself.
Good afternoon, good morning, and good evening to those that are from other time zones. Maybe this is better?
Yeah.
Okay, cool. Ron Devari, my passion is about creating highly scalable and value products. Started in engineering first, no other place than Southern California with a company that is now Boeing, McDonnell Douglas. Moved into financial engineering at a company now that ended up being BlackRock. Built out the structured finance approach, which led to the transparency tools that hopefully help to save the world. Started NewOak Capital by going downstream, meaning the structured products in the securitized form was already 4 or 5 steps removed from the investor. I felt very strongly that technology was there to be able to bring that, close that gap. And that innovation has led to NewOak Finance, which I consider to be the integrated or embedded finance, being able to effectively connect origination all the way to investor and servicing of those assets, make that available to everybody.
Well, That sounds great. So we have a fantastic panel, and a lot of things are going on in the fintech. I think the latest and greatest news is the ability to securitize. Sorry,
Yeah.
The Bitcoin doing the ETF,
Right.
and that is kind of like a changing little bit of a landscape from the point of view of fintech not being a darling of all of the investors. So as we know right now, the rounds B, C, D, and Fs are kind of like not really happening too much for the fintech. But I think that there is going to be a lot of interest in the new blockchain, and otherwise Bitcoin is just getting that new aspiration to be $1.5 billion, $1 million per coin by year 2030. So that brings a little bit of an excitement to into the situation. 1.5. It's actually our
1.5
investment.
million.
Yeah, 1.5 million by 2030. That is by Kathy Wood from ARK Investment. That's what she said. She actually upgraded that. Yeah.
So you agree to that? Anybody else? 1.5 million?
By 2030.
Well, if the dollar, I think if the dollar depreciates, it will get there. It depends on where the dollar is and what the value of people.
It could go to 1.5 million and then drop quickly to $3,000.
Hey,
I wouldn't go there.
we'll see. At least there's excitement. Okay, let's put it this way, because otherwise, everything right now in terms of the investments, as far as the VC is concerned, is all about AI. So, and then it used to be the other way around. So, anyways, I wanted to start with Julia to kind of like tell us a little bit about what the current family office tech stack looks like those days. You hear me?
Yeah. No, I was thinking maybe there was more that you wanted to say. Okay. Yes, it's a very interesting market. The family office tech market is not as well documented, shall we say, as, I don't know, a banking sector, for example, right? Because Ernst & Young and PwC, they go into banks and then they say, well, here's your tech stack and here's what's going on here. They don't really do this for family offices for various reasons that we can discuss later if anyone is interested. So we've decided to actually take a stab at it, and IvyFON is actually involved in that, and Marty wrote a very nice quote, for this particular edition of the Family Office Technology Guide. And we mapped out the market. We basically said, like, how do you group all of the tech that family offices can use? And so we grouped all the tech in ways that, I mean, it's easy to propose something else and do it differently, but we basically said there are end-to-end asset management platforms where everything is built in. There's CRM, there's your portfolio management system, your risk management, your accounting, and all sorts of other things that could be bolted onto that. And then, of course, there are also, consolidated reporting and portfolio management systems, and they're separate from CRM. And so you don't get like a one big platform. You would actually get a variety of platforms, kind of best of approach, and then connect them through APIs and have that whole infrastructure run together. What's really interesting is that there are many more governance and communication solutions that have been coming onto the market. So that's kind of, we started seeing more in terms of helping families organize their, legal records and kind of notes to each other and all that. So there's like really cool tech out there. for that. And there are also new alternative marketplaces, investment marketplaces that have been coming up. And some of them are, generalists, and they would take up, any deal for any particular industry. And some of them specialize, and they would only do sports deals or music royalties or carbon credits, or do you know what I mean? So it's a marketplace, but it's dedicated to, any one particular topic. So makes it easier to find co-investments. So those are kind of the interesting things that we've been
Mhm.
up with. And
Great.
happy
Well,
Marty has it.
yes.
and-
What is that, Marty? What'd you say?
She's created a great guideline for technology use.
Yeah, I saw that.
Yeah.
It's really good. It's really necessary because with AI and all the other stuff, just general, you have to be really fast to be responsive to the marketplace. You can't really be passive too much these days.
Mhm.
And is that document that Julia, are you guys going to be sharing with the IvyFON?
Oh, yes, absolutely. IvyFON is a sponsor of it. It's on there, and Marty is on one of the first, front pages of it. And absolutely, it's something that, we see it kind of doing this for the community. Do you know what I mean? And taking a stab at it so that it's easier to find the various solutions, understand what's out there, the tech that families can use.
Mhm. Okay, well, sounds good. I don't. I want to kind of move towards Ron expertise, which is the ESG governance, risk and compliance, and regulatory aspects of all the fintechs. Because as this new technology grows, you need some level of regulations. So I wanted to ask Ron about his involvement in your company in that area.
Oh, my definition, when we started, we had to deal with solving the problems of the past for the banks and some of the largest institutions. So NewOak was born as a bringing transparency to very complex situations in which involve securitization and the rights and wrongs that had been done. So that was our first iteration with being able to even address issues of reps and warranties in instruments that are so simple, mortgages, something that has been around forever. That really led us to survey what was available, what we could be used. We didn't really intend it to become a software company initially. But very quickly, we found there was nothing to manage the workflows of requirements to written policies and procedures, and then ultimately the workflow around it, and then documenting the 3 lines of defense that the Fed already had required the banks to do. And the CCAR was effectively a wake-up call for and a lot of the Dodd-Frank stuff came about because the Fed really had no idea what was going in the banks, and the banks had no idea what was going on in their backyard, let alone the family offices. So it's been a journey of 15 years for us to utilize that in order to even be able to provide the best in class service to some of these very large crises. About a year and a half ago, one of our partners who's in the wealth management business, he came to us and said, can you show me something for client onboarding that I feel comfortable when the regulator come over just out of Canada, that I've checked all the boxes. And so we went around and checked around, and we looking at the process that was being built and the requirements that was there and the questions that he was getting from the regulator, I guess in that case, found out that it was so dynamically changing with personnel, with products that was being added. Hardwiring anything would be the wrong thing to do. So we said there must be a solution, technical solution for people who want to change a workflow process. They don't have to go back to the developer and spend a whole boat of load of money and rewrite the software. Well, AI AI being a code debugger and code developer for workflow came around, and we developed a product around the client called Risk AI. And the client liked it so much, said, Ron, you're my partner, why don't you commercialize it? And we started, having conversation. I was the co-chair, the chair of the education committee for Premier Risk Management Professional Designation. I presented to the few colleagues, and they said, you have to look at the AI regulation that's coming out of Europe and see whether this tool can be helpful. So we're going to use AI to control AI? They said, that's absolutely right. So that's exactly what it's amounted to. So emerging areas of ESG and AI that require governance to even be able to make your own disclosures. If you have look back, actually, Goldman got zapped for not following its own policies and procedures. Not a regulation. They stated something and put it on the web, and they went back. And if you look at a lot of retailers and a lot of big companies, they're taking all their ESG claims off the website because SEC is going after it. Essentially, you're making a statement, you better be able to prove it. So we're in that journey of commercializing a tool that was really internally intended, not unlike what BlackRock did with their Aladdin. So again, it's a very, very simple-minded tool. The parallel to that is what is called Open Pages, Watson IBM, which is fully hardwired for over 30 years, meaning that you can't really touch that thing unless you spend millions of dollars to adapt it to your own. We can talk about it later, but the bottom line, scalability, agility, and continuous 3 lines of defense, meaning that you're auditing your own process as you're doing it, and you're getting alerts as you're doing it, so that the process is a lot more transparent. And that's really what we are all about.
Well, thank you, Ron. And I actually have a question for you, Maggie. Maggie, you're working in the fintech investment for over 15 years now. So I just wanted to get a little bit of your experience, your VC experience, and how would you transfer your experience to select the GPs in the family offices?
Yeah, that's a great question.
You have to speak up.
Okay, so I started working my first fintech fund. I started working on small fintech seeding fund from 2014, and then it has been great experiences because I got to see the full cycle of a fund from capital call to exits and then the end of the fund term. And I helped with some exits myself because I married an early stage company with a later stage company because the early stage company was near the end of the term, and then they needed liquidity, and then later stage fund couldn't get allocation for the pre-round. So I married them, and it was a happy ending for both sides, and I executed documents on both sides. I think I'm going to answer the question from different angles.
Right.
First of all, let's say single GP fund versus multiple GP funds. I will tell family office not to single out single GP fund, because when you have a single manager, things can be really efficient and decisions are made really, really fast. So I have a couple smaller funds. The fund size is really small, but they had both of them had a home run. So at 20x now, but it's still unrealized gain. Mm-hmm. So which means I sometimes think small is beautiful. I mean by when you don't have a big AUM, the managers couldn't live off the management fees very comfortably. So that's why they put their heart and soul into the portfolio companies. And as a return, the results are much, much better. So I had a company that grew over 10 times a year. And the first round, we investing 20 million about 20 million pre. And then 2 years ago, it was about 4.1 billion, led by SoftBank. So yeah, so yeah, I like the results for some of these micro funds. However, I think when you have, but then over the time, I think if you have more, and oftentimes I heard from the GPs, gosh, I wish I had more capital because it's a good company. Smaller funds, there's only so much you can do with the limited capital. But with bigger funds and bigger capital, I think you can do a lot more. And I really like the strategy, just like in capital, it's a full life cycle fund. They invest from pre-seed, early growth, late growth, and they also have a long-only hedge fund. So it's a full life cycle and it's offer full spectrum investment opportunities and co-investment opportunities to the investors.
And what's the size of the fund?
Right now, current AUM 1.2 billion. Raising 700 million. So by the end of 2021, should be over 2 billion.
And is that focused?
Four different. So Fund 3 will be vintage year 2024. So first year, Fund 1 is 2018. So
Is it a blended fund?
no, we have separate funds.
There's separate funds, or the hedge fund is separate from the venture.
4 separate funds, 4 different strategies.
And there's four vintages in each fund. There's 16 funds.
No, right now fund group has okay. So Fund 1 and 2 and 3 also have separate fund. Well, pre-seed, early growth, late growth, they're all separate funds.
But the total is
It will
1.4.
be, yeah, total AUM 1.2.
Right now is a hedge fund.
All 4 funds,
You're raising all four.
correct. 4 separate funds.
How much is under management right now?
1.2
And
billion,
how much more are you raising?
700 million with a hard cap 1.25 billion.
That's really nice.
So that's I touch based on the size, the single GP or and encourage the
Single GP, you mean single person or
single general partner,
as a person or as a company?
as individual,
Individual.
the managers, yeah. I've
So
seen 3
the-
results from.
So the decision making is only done by the person.
Exactly. You brought up a really good question because some big institutional investors, they don't invest in a single GP fund. It's just a requirement. There's no way to work around it. But for family office, I think they might have more flexibility when they choose which GP to invest. So that's from this one angle. And then the other angle is that when I decide which GP I want to work with, I have main 2 criteria. One, does the GP have, is the GP a good investor? Does the GP have a great track record? Second, does the GP have a strong work ethics? So these are the 2 main criterias. And also coming from the top tier funds, I have learned 2 really important things. One is the fiduciary duty, and then the second is the risk management. Fiduciary duty, LPA is the Bible. It dictates what we can do and what we cannot do, right? So I was trained at DCM. DCM trained me how to be a successful CFO. So I think we need to be extremely professional, and because we have the fiduciary duty for our LPs. We need to safeguard their assets and generate returns for them. And all the VC funds are tax driven. So, how do you structure the funds in the most tax efficient way? That's also important. That's part of my responsibilities. I've learned heavily involved in tax planning strategy, and because tax saving is also important.
So you're not a fund of fund, you're a fund of individual companies, correct?
Correct. Direct investments, all direct investments.
Um,
And the risk management is more important than ever with AI. I'm sure you're going to touch that.
Yeah, in fact, that's something that I wanted to run, because Ron touched a little bit on AI aspect of what's going on, but I think that I wanted to ask Julia, actually kind of shift into the AI aspect of of the subject of the fintech, because this is where the game changers seem to be. I mean, there, on the one hand, there's a lot of IoT, machine-to-machine communication and doing the monetary transfers, but there's also another way of actually getting deeper into the analytics. So for example, Visa right now, their trajectory is to gain 50-50 balance between the actual physical transactions fees that they're getting with the analytics of who it is that is using their product, right? So they're starting to definitely use the AI as a form of the revenue generating. And I know that Julia is always on the top of the technology, so I wanted to ask you, Julia, about any tools that are AI that are applicable into the fintech that you know of, and what is it that you're doing there?
Yeah, so you're absolutely right in saying that AI is a game changer. And one of the really huge drivers is regulatory and regulatory compliance. So I'm on a bank board, and we constantly review how do we keep up with regulation, just fulfilling just the requirements. And AI that is being built into the AML type compliance, I don't think any bank could really keep up with those regulations and fulfill them without AI at this point, no matter how large, and they still have large teams. But the bottom line is, when you have systems, there are so many exceptions thrown out there that you really cannot take, you cannot review each one of them. So AI at this point alerts banks to things like, there's probably a human trafficking group, sitting in this particular location. How do they know? Because it's one address, but there are, 25 food deliveries at lunch, right? And it's an apartment. So this could not possibly. So things like that, AI identifies and just alerts at this point. So that, the idea is your staff spends time on analysis and action as opposed to wading through all the data. And I think that as we have more and more data points that could be brought in, right? So now credit card data is piped into AML analysis and all that. So data is out there, and without AI, we won't be able to really, make it actionable. So that's one instance. And then, of course, AI in deal sourcing is also very interesting. So we can, fintech is so broad that we can go like, what I mean, sector by sector and what's going on there. But let me stop here just in case there are other thoughts.
So you see that in the actual fraud prevention and also in compliance work for all of the ever-changing rules and regulations that the AI is simplifying the processes.
Yes, it's already there. It's already mainstream. Every bank has a solution like this. This is not even the future. This is basically, you're not gonna, you're gonna get serious regulatory issues if you do not use a tool like that. And these tools are expensive, so there's obviously pressure on banks, to create revenue where they're running these stacks. They're running this massive tech stacks that are expensive, and they have all these, various components plus the staff.
Well, thank you very much, Julia. You want to add some to the AI experiences?
So like everything else, AI has taken off and has started really making a very big dent. But at the same time, it's raised a lot of alerts in the banking system and in the actual governance of the AI. We did a workshop in Amsterdam. We had 5 banks sitting there. The banks are scratching their head. Are they going to be able to respond to European AI regulation that was just put out. Now, one of the requirements of a regulator is you have to be able to interpret your models, no matter how you derive it. You have to be able to predict what the model does. You have to be able to predict the boundaries for it. We're going back to when we started doing CCAR and review of the banks back in 2009 and 10 and 11. One of the largest insurance companies in the world were telling me that I have over 30,000 Excel sheets. I don't know who wrote them. I don't know who maintains them. I don't know who changes the numbers, but I know that all that data comes ultimately to the Treasury desk, and they decide the liquidity requirements of a massive multinational bank. And they were off by about 300% on a daily prediction of how much cash they need. 300%. And so that alerted the regulators. So what's going on? So one of the biggest requirement was, has there been a governance and control over the models? And that model validation, model documentation, model maintenance, interpretation is not a new thing. But AI makes it a lot harder, because a lot of the people who have developed AI models, they are hackers, right? They are less than 2 or 3 years experience out of Cornell, MIT, Chicago, whatever it is that these guys are hiring from. They are more innovators than they are production model maintenance guys. They don't like that. That's not their breed. So that's really where it's coming. The issues are, you have seen the chairman of SEC has gone on the record that if our financial system ever gets brought down, it would be by AI, not by a human being. So these are, I'm not trying to be alarmist, but the reality is that we already had a problem not being able to deal with the current regulation. Now we got more. I also make just a comparison in ESG. We can't even manage cash today. If you look at the parameters that you're required to ultimately report to on your greenhouse gas emission, it's far more harder to do the accounting of that where the regulator is asking. So it's full of holes for a regulator to come in and say, you're misleading, you're misrepresenting. It's easy for them to catch you for technicalities. So I think that's where I think it's a new world, new tools, two very, very, very new fronts, and very few organizations are managed to handle it. One of the largest banks in the private wealth, I sat next to their head of ESG. 3 guys in the legal department that have to manage the entire climate risk and ESG risk of one of the major banks in the world with very little budget. So just keep that in mind, is as an opportunity rather than so that's where the dollars are going to get spent. Every auditor's presentation I go to, they're trying to S&P and Moody's and others. That's where they're spending their dollar today, as not fall behind, because their entire business model is being upside down now. As you said, Visa trying to figure out as your financial rails become more commoditized. Fed now makes Visa effectively obsolete, right? Ultimately, if I can do bank to bank, don't have to use a third party, I can pay a merchant right when the customer is there, the merchant gets paid, I get the customer, and Visa is out. FIS is out, right? So those are the amount of opportunity set for a gold digger like me to figure out how to really become. And I think there's an opportunity aspect, and then there is, how could I use it today? And then the other part is, how do I make sure that I don't get victimized by it? So there are risks to your businesses that somebody else will take over that business. And I take a real estate example. How many of you think the real estate market today is using information in a very transparent way, from efficient way? If you're owning real estate, you're managing real estate, you're closing real estate, you're lending on real estate. And we have been at this for 40, 50 years of Web 2 technology, and people are talking about tokenization and going to Web 3, whereas Web 2 has not even perfected yet. Right? So we got a lot of great things coming up as an opportunity set to become more efficient and better and lead over other competitors. So again, that's I'll be watching, because I think that's where new players are going to be. Then I'd like to see where Bloomberg would end up being in 5 years from now, 10 years from now. Sure.
Sounds good. Well, thanks, Ron. I want to ask Maggie, in terms of your fund, right? What is it? Are you looking specifically? Like, I understand that most of the funds are going to be used for the early stage, more so than later stage. So, what kind of opportunities are you looking in the fintech space? Like, what kind of companies are you looking for, and what's your like a sweet spot in terms of the funding?
That's a great question.
I need to use the microphone closer.
I need to think about this. This is a
Okay.
great question. So we have identified 9 verticals in the fintech investment thesis. Some of them are including, not in the specific order, like CFO task stack, insurance tech, InsurTech is one of them, and then obviously blockchain. So I think things are constantly evolving in terms of the sweet spot for our investment decisions. So obviously, the funds are SaaS, B2B SaaS exclusive. So that's our focus. We're not investing in to C business at this point. So the sweet spot is actually hard to say for early stage, because we have different strategies. The reason we have the full lifetime cycle is because we can fish in our own pond. So we're feeding the early stage investments to late stage strategy funds, and then obviously the hedge fund will help with the exit as well.
Okay.
So I'm thinking about the 9 verticals, and they're equally important.
Sounds good.
On that side of, essentially feeding their subsequent fund, are you finding that transaction needs definitely a third party, because there's a bit of, you have to make sure you document it properly so that the valuation and the transfer.
Yeah, usually from valuation perspective, we only read up if there's an outside investor in the later round.
Yes.
Yeah, if it's inside round, we usually take a 50% discount. And then the reason that we invest in pre-seed is because when you say no, reject the funders in their early rounds, they don't forget. So you might not get next round opportunity to invest in the next round, for example, for example, A or B. So I think this strategy has worked out great.
So you're trying to put the foot in the door, in order not to be rejected. You even try to like write a small check to be accommodative towards like potential good opportunity that you're hesitant to put the money in, or.
Well, obviously, we have investment. The committee meets every Monday. And then we obviously have a criteria to select. We don't just spray in and.
No, I understand.
Yeah.
Just like trying to see if you have like a FOMO thoughts, and since you have to think about the multi-level of the investment, then one group may may want to actually add on some extra weight into your decision making. But I think we have like about a few more minutes left, and I wanted to go to Julia in New York and ask her from the point of view, like a lot of new developing technologies. One of the ones that we did not touch is a blockchain that seem to be adopted nowadays, and there's multitude of really good products out there. And I just wanted to have you share a little bit of thoughts on that technology.
Yeah, there's something interesting that's going on with blockchain, and is the fact that in the New York State, the regulators are actually looking into adopting a blockchain solution. And this is kind of a shift in the market where it's no longer banks, financial firms that are driving it. It's literally regulators beginning to look at it. And so, a part of the question is, how far along are they in that? And also, what kind of opportunities would that open up, right, for the rest of the players on the market? Because if they literally embrace that and adopt it, then it's going to be a game changer for sure for financial institutions.
20 minutes.
Is your,
It's what it's.
we're done.
We're done. Okay. Well, well, thank you so much for Julia, Maggie, Ron. It was a great panel, and I'll see you guys next time.
Yeah, thanks so much for the input, guys. Thanks.
Thank you so much.